pretty much anything else, and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat. You can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. What's happening, everybody? Happy Thursday. Welcome back to the session. Just take a look at this morning's heat map to see where things are moving or shaking. We have some earnings coming up today. We had Tesla this week. We have Google today after market. I took some shares. I added into the Pulver list. I bought some shares of Intel. Tesla is up to 255.19. I've got a covered call this week at 257.50. If I get it called away, that wouldn't be bad. That would be an immediate flip for $5,000. If it doesn't get called away at 257, that's fine. I will add another covered call for next week and continue to go on the repair route, try to lower the cost basis aggressively. Let's see here. So advanced decline lines for the day, we're about 67.7 advancing. There's some green sprinkled in. IBM shares actually beat top and bottom earnings, but down on the day by about 6%. I saw that Palantir's up near highs again. Let me get logged into my Thinkorswim. Take a look at some other plays. So for the morning, looking like we could just have a bit of a slow drift. So SPX kind of working its way back into possibly, yesterday's highs. We still, if you take a look at the Wednesday high from April 9th, we still haven't hit it. This high was 54.81. We've come close 1, 2, 3 times, maybe fourth time's the charm, but I still think there's a lot of resistance right in there. Today's price action, especially if we are heading up into test yesterday's highs, or we have another, perhaps a lower high. I'm curious how today's price action plays out. I got in for a trade this morning, kind of splitting the difference. Looking to see, price could fill the gap, price could test the highs, but I just want to see how price behaves. We'll find out. But as I've noted here the last couple of weeks, lots of resistance around that 5,500 handle. The 200 moving average would be, this is the trend line that we should all be watching right here, right here. The bulls might get a little bit more excited if we are on the right-hand side of this trend line. Okay. I still think this potentially is a bull trap scenario, so I want to be mindful of that. But it does give us room. If we can clear the April 9 high, it does give this market room to get up into the 200 moving average and back into this cluster of support resistance where all the nonsense and damage was happening. So this was Mag 7 rotation, this was tariff talk, and this is Liberation Day. Define it however you want. Point is, if we're on the right-hand side of the trend line, the bulls can get a little bit more excited. But in this area, the bulls still have to prove that they can, somehow carve out new highs. I don't know if they're going to be able to. I could see this setting up with a, bullish pattern in here. Okay. But it's going to be volatile just because if we don't break this neckline, we're not hitting all-time highs. I could see this being, a big bull trap if you're not careful. So I'm still not taking, it'd be like a pleasant surprise. If we get a pleasant surprise to the upside, then obviously above the neckline highs at 5,800, sure, there's upside there. Go test the highs, go target the highs, yippee skippy, and then be prepared for, maybe a retest of the lows. I still think that this kind of July to January window moving forward is going to be a really important time for the U.S. to still show its resiliency, back off on the tariff stuff, get these solutions rolled out for this trade war, see if U.S. and China can play nice together. Maybe they do, maybe they don't. All right. But nevertheless, just watching for the morning. So we've got some prices that are up. S&P's up over 1%. Nasdaq up about 1.7%. It's pretty impressive there, but still not above the highs from April 9th. So still watching that level. Move this chart alarm down right there. See if that gets tested. These levels, I can delete those lines now. So we'll keep an eye on it for the morning. Dow's up 0.47%. Russell's up almost 1%. VIX is down 27. Bond volatility is down. Let's see if we're getting anything on the 10-year. Not really, just minor improvements. TLT yesterday was a big volatile day for the bond market, so TLT was gapping higher, faded. Today we're gapping up, but we're not making any new highs. Let me see if we get a high at 89.06. I'll put check US 10-year. I'm just looking to see if yields are going to go down. Global yields have been going up, which is why this US 10-year has been so sticky. Um, I don't think that the US is super excited about seeing this kind of break in the bond market. Um, I'm very curious, like June to December, if the Fed starts cutting rates, what these yields end up doing. Global yields are going higher. That's why the US yields have not been, dramatically lower. Obviously, they lowered on the market falling, right? Market fell. I mean, this was peak to trough of 21% in the S&P, and we fell by maybe 100 basis points. But interest rates have not improved at all. We had a 95 basis points drop in the 10-year, and there's no way that mortgages didn't improve that much at all. So we're right back where we kind of started. It's actually kind of worse because credit spreads have widened a little bit. If you go to junk, JNK, so we've come back from a pretty nasty scare going into April 7th, April 8th. That was when the bond market was kind of showing its cracks. So same thing here on LQD. But keep an eye on this. I mean, if this continues to, go up, that's a good thing for liquidity. If this continues to go down, that's a bad thing for liquidity. Watch your 10-year spreads or your 10-year yields. It's going to be important. We talked about this as far as, is the U.S. going to go into recession? Until we start to see this is initial jobless claims, until this starts ticking higher, trending higher, until continuing jobless claims is trending higher. So this goes back, I mean, even this last 4 months right here, it's like everything's been consistent. So we're not really seeing any major trend on continued jobless claims or initial jobless claims, but important to watch. Unemployment rate sitting at 4.2. So, I mean, so if you want to look at those tickers, you have trading view charts, USIJC, that is initial jobless claims, USCJC is continued jobless claims, and then UNRATEN, whatever it is, UN rate. Just type in unemployment rate. I'm like, the symbol is UN rate NSA. Just type in unemployment rate, 4.2. So until these three collectively are going higher, this whole talk of U.S. recession, this market can still climb the wall of worry. The U.S. recession or the U.S. economy can still show some resiliency. So it seems to be like everything is okay. I would still agree with the comment that this market is desperately looking for something to give it some reasons to go higher. To what degree? I think, yeah, I mean, we could go higher into this noise. We can go higher into this noise where all the mess was started. We could surprise to the upside, and I don't know how that's going to be. I don't know how we get to all-time highs unless everything from the trade war and tariff talk is like backpedaled to, okay, look, we're just going to do 10%. We're negotiating. Everything's good with China, and everyone's happy. Then maybe all-time highs are justified. But if we're still uncertain on trade war and we're still, kind of floundering through earnings that are some good, some bad, I don't know. Just I think there's a chance to hit some pause buttons around the 56, 5,700 area on SPX. But obviously, I've got a bullish tilt to my portfolio, and I don't mind seeing the recovery. So obviously that's good. But I'm not crazy aggressive, nor am I crazy directional. I've got some good trades and good profits running. So for example, some of my swing trades are improving. So SPY, I've got a trade that's up about 72%, 56%, 66%. Happy with that. Might end up taking some profit. This one is down, but still capable. I mean, we're 54.38. That is 200 points clear of this level by May. So this one could be pretty good. I probably have to wait a few more weeks on this one to have it start paying me some profit. This was also taken at a time of fairly high volatility. So I've got to let some of that volatility settle. But yeah, it's nice to see the market, drifting a little bit higher. I'm curious what today gives me. If today is just all up, then I'm probably going to take a small loss on SPX, and that's That's okay. It's still annoying, but it's still okay. But I'm curious how the day plays out. I mean, we've seen some volatility from Monday to today. I mean, this whole week has been volatile. Intraday price action's been pretty messy. So, down all Monday and then came back at the end of the day, up all day Tuesday, came back down, up yesterday morning, came back down, and then settled back in. Today's up all morning. We'll see if there's, kind of some market maker levels that are going to be responded to. Let me take a look at some key levels on the day. So right now, all my big gamma levels on the SPY would be lower. So 535, 530. But as the market's trading at like 540 or so, I mean, if this just drifts higher, 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 um, maybe these are all just defense levels that don't need to be tested. If I go into some live data for SPX, there's a pretty key resistance zone around 5450. We'll see if that holds. My sell zone for this morning, let me check that. That's pretty much right where it is, 54.45, 54.50. So if that level holds, I'll see if there's a little rejection out that 54.50 handle. Same thing here. There's a 5500, 54.50 zone. Yeah, that's a big spot. So right over here, 54.50 is a pretty big level in case there is a defense play today. Okay, let's continue to work our top down. So assets up, 60, almost 70% of stocks advancing. Let's go back to the home screen. So about 67% of stocks advancing in the U.S. Not all perfect. Some of the rotation has been out of defensives. So Procter Gamble taking a hit, Walmart stalling, Costco stalling, Coca-Cola flat, Pepsi is down. We'll see what Pepsi reported earnings wise. Railroads, Union Pacific down. NextEra Energy down. So where's price kind of jumping back in? Well, tech was beat up pretty badly, so a lot of this is popping back into semiconductors. Tech Mag 7 is responding pretty nicely. So just a quick sector look. I mean, Mag 7's up 44.61. We're up to some fresh levels. Could Mag 7 have a little swing trade? Swing back up to the 200 moving average? Sure, we can come right back up in this level. Not a bad spot. I mean, going back up to like 45 or 40, let's say $48. We go back to $48 on mags. That's not a bad trade to the upside. I still would not be opposed to either one seeing mag 7 drop a little bit. I saw that Meta and Google are getting hit pretty hard from the Eurozone right now. Is that it, or is it Apple? Apple and Meta. Apple and Meta are getting hit from the Euro block right now with some big fines, like $500 million or something like that. So, but Eurozone's always trying to push on tech. Anyway, Apple's up, Amazon's up, Broadcom's up, Google's up with earnings today after market. We'll see what we get. I need Google to stay above 150. Not this week, but just in general. I have some ratio spreads on Google. Meta is responding. I'm hoping that Meta will have one more flush down. I'm hoping there's a little, I'd say, resistance up here around the 200 average. So if we hold those, hit some resistance, maybe chop around, I might look at carving out a low on Meta. I could probably do a 1-1-1 trade on this one, try to have maybe some ownership in the low 400s. I looked at it yesterday. I'm like, I'm just not ready to throw the trade in yet. Microsoft also up. Income trades looking good. I took some profit on Netflix this morning. So it got to my expected move on the upside, grabbed a small profit. It wasn't great. It was like 13, 14%. Had I put the expiration for this week, so tomorrow's expiration, it would have been up closer to full profit. So it would have been $1.60 out of 320. Yeah, it would have been up about 50% if I had the expiration tomorrow versus next week. But it is what it is. I'll take the small win. It's fine. I had a winner on Tesla for earnings this week. I have the shares covered at 257.50 for tomorrow. If it's above 257.50, I might roll it. I might not. I might just take the win, take the $5,000 winner, and move on. And that'd be another little flip, and then I'll deal with maybe some income on the May 16 expiration. But for a terrible earnings report, it was kind of nice to see that the stock did the exact opposite, because kind of all the garbage was priced in when Tesla was down about 60%. Okay, Berkshire possibly going to get back to fresh all-time highs. Let me set a chart alarm there. Bonds, like I said, pushing higher in TLT is not bad. We are pushing up in equities, so interesting move to see like TLT is maybe going to breach this 89.06 level. If we see bonds up and equities up, okay. I mean, I'm just looking to see if bonds are up. I want to see yields go down. That's really the correlation I'm watching. If equities are up, cool. That's making trading a lot easier. If bonds are up, great. Hopefully yields fall. Okay, a couple more stocks, and we'll switch into some currencies. China is okay. QQQ here. Fine. Alibaba, showing some resiliency. Um, I don't have any shares of Alibaba. I let them go on that first big run. So I took some shares off here, reloaded, took some shares off here around the 130 handle. I didn't reload. I haven't reloaded yet. I do have some debit spreads, credit spreads. I have some ratio spreads that are way out of the way, so those should be fine for profit. Baidu, I still have some shares of Baidu, and my collar trade. Let me check this one on Baidu. I don't know if I added in new positions. Okay, so I have a 95 covered call out to May. That might get called away. Maybe if we have a decent run on Baidu, that might get called away. 95 is in the mix. I mean, we were as high as 105. I've rolled this up and down and try to find some fair levels here, but 95, I pulled in a decent premium for it. So if it gets called away, fine. My break even's like $85. So I mean, if I get called away for $10 a share, that's not bad. I do have some. Let me go and see what I have for Baidu. I've got a decent amount of shares of Baidu. So the ones that I all have, so one, I'll just add this up here. I think I have close to 1,000 shares. 150. I'm going to do like for 150, I'm going to do a 100 share covered call, 200 share covered call, 100, 100, 100, 100. There. So I have 900 shares plus some surplus, but if I'm going to get it called away, I'm getting 900 shares called away for about $10 a share. So if I get it called away at 95 and make about $9,000, plus I have some other shares running, and that's fine. I'll just continue to watch it. I think if we're talking, you know, China and US play nice, maybe these stocks return to the recent highs. I think technically Baidu still looks pretty good to me, having this longer term support and having this level get tested. Very kind of noisy bottom. But if we make our way back up into this range, I mean, I could see the stock at 110 to 115. Fair market value on this is way higher. So just I don't know how much long term I want to trade this. If I'm getting the trade to fulfill the technicals that I'm looking for, this major low to this major high, I wouldn't mind being bullish on this thing towards the 150 to 160 handle. But the question is, how do I position for it? Maybe this is a channel. Maybe this is a ridiculous runner and bull flags, but time will tell. Otherwise it's just messy and noisy. And if I get it called away, I'll just keep flipping it for income. All right. Levels are looking a little floaty to the upside. So we might end up breaching these highs. I mean, don't tell me that today's going to be just all green. Just based on a market maker move, if we see 0 red today, that is going to be really annoying. I mean, we have had 1 red candle on a 5-minute chart for the last hour and 8 minutes. Like, and this is, I'm sure you can look at the volume on today's trading. I'm sure volume is lighter, right? Like everything's up. Things are not as heavy on the sell side. We'll see. But do we respect this high? Respect this high? Is there a level that price is going to reject intraday? Maybe, but only having 1 candle up in the last hour is kind of ridiculous. Why is it annoying for a market maker? Because usually they're calling levels where they want to see prices stay within an expected range. So their job is they're going to have to be delta neutral. So they're probably accumulating calls right now to hedge what would be just premium selling on the tops and bottoms. The move today should have been roughly around 55 points from the open, and it's probably pushing higher than that right now. So I'm looking at plus minus around 75 points today so far. So a little test of those highs and lows that, market makers are going to have to be doing a little bit more work to kind of contain prices or be hedged accordingly. All right, we'll see. But I noted on my gamma levels here, like 5450 could be a key spot. So if we hit 5450 and then bounce off of it, let me change the color. We ran up from an open around 53.75. We were down here to start the day. We've run up this far. If this is a big enough level to show some resistance, well, let's see if market makers respect that. So keep an eye on that. Okay, other China stuff, FXI, KWeb, JD. JD has earnings middle of May. I still have some shares of this one. We did have a gap lower, which I thought was interesting. Let's see here. ADR receipts track higher in Thursday trading. That's kind of encouraging. That means that more Western money is going into China stock. Dividend and growth. I own shares of SEHD, SEHG, and SEHY. The advanced decline line. This is another one to kind of watch for. I don't remember what day it was this week, but I talked about a synthetic long on MES that would have worked out pretty well. I didn't take the trade just because I was like, oh, maybe this gap fill happens, whatever. But watching to see where these market breadth indicators line up. If I'm looking for market timing again, kind of a broad, index timing, I want to see, how many stocks on the S&P are above the 50-day. I want to see it as as low as what it was when we started talking about April 7th, April 8th, talking about lows. It did end up being a pretty nice trade. So if we revisit lows again for this market breadth indicator, then I think I'm looking at kind of buying more shares, maybe trading something synthetic. Costco mix, Walmart heading back up. I've got Walmart collar trade. I did this one out to August, so this one has a while to sit, but I get it all the way at $100. I wouldn't be offended by getting Walmart called away at $100. I'd flip that for about $10 a share. Nike, I sold some puts on Nike, 55, 50, and 47. Collected $5.10 credit, so we'll see if it stays and holds above that 55 handle. MasterCard, this one I'm watching. So Amex, I've got a ratio spread that is going to be upside down because it's a 10 wide ratio spread. But if we stay above 260, this trade is looking a little bit better going into the end of the month. So Amex is, let's go Amex here. So right now my total position on Amex is down about $37. There is plenty of profit potential here. This could be a really good trade. I mean, I don't know if I'm going to wait the full 22 days, but if I've got $1.82 or $1.86 or $1.89 of income, I also have a potential $10 profit trap between the 260 and 270. So right now, let's say that price was coming into expiration is trading at 263.97. I would have $6.03 bonus profit on top of the $1.82 credit. So what could be a pretty easy, $600 could also pay out an extra $1,800. So if it's greater than 260, that's awesome. If it's greater than 260 and less than 270, then I get a profit trap on top of that. If it's greater than 270, no big deal. I'll make $600. But I want to see if Amex can stay above that. Also, earnings came in positive, so that's good to show that like the consumer is still okay. Amex would probably represent the higher earners. I wouldn't necessarily say like your 1%, but maybe your top 10%, top 20% of earners. A lot of entrepreneurs and business owners have Amex as well. So if they're still spending, things are okay. Maybe until they stop. Okay. All right. Johnson & Johnson, super volatile, but still resilient. I've got puts at 140 and 135. Progressive, took some income trades there. CB, I still have some trades out to May. This is likely going to be full profit. If this one's in like 90+% profit, I might just take it. 87% of the way there. So it's close. Let me check this one here. So a 111 trade. So I mean, 201 is my max credit here. I probably don't have to protect it. I mean, a 215 right now on the option chain would be, it's trading at a 1 delta. So the odds of this thing having to, be a threat is like 1%. So I think if I just wait an extra 22 days, this should be full profit. It's not grabbing a ton more profit. I'm grabbing maybe an extra $100, but I shouldn't have to adjust it. So anyway, that's looking fine. Palantir earnings are in May, but Palantir's actually moved higher. Alphabet, Palantir team up to supercharge AI for federal agencies. Oh, a little love for Palantir. Uh, Still hasn't hit the 200 moving average though. Doesn't mean I want to short it, but we hit the 200 moving average back here August 5th with that July to August bottom from last year, and we came very close to testing that level at 66. These trades closed out last week for full profit. This one is another ratio spread out for full profit. I'm not going to touch this one. 45 by 44. The odds of it coming down $60 are pretty slim. That's good for Palantir. Teaming up with some big tech and getting some love. So I'm sure there's traders out there. I mean, it was the best performing stock last year, so buying a dip probably looked enticing when the stock was down about 30 to 40%. Yeah, it was at a 47% correction. So I'm sure there's some buyers in there that are happy to see a $40 move. Nirvana, Salesforce, little O'Reilly, missing top and bottom. That top I was calling around 1450 worked out pretty nicely. Zillow, Uber's hanging in there. This is a ratio spread. This one should be looking pretty good for profit as well. I think this is a May expiration. Uber. Yep. So I'm up about 80% of that profit. May expiration. 65. What I do here? I think I did a 112. So yeah, I mean, I've got a 250 profit trap with a $60 assignment price. The odds of I guess we have earnings, but 60 assignment price is right now trading at like a 6 delta. So we'd have to have a pretty nasty correction in Uber. Expected move even through earnings is only about $7.50, and we're trading at 76. So I think I'm fairly safe on this trade with a profit trap potential. So we'll see, but I still like it. I mean, right now, here's the deal. Over the weekend, with time decay working in my favor, over the weekend, if this goes up to like 85 to 90% of max credit, then I'll probably just take the profit. So I'll continue to kind of prune the portfolio. I think one key thing for any portfolio right now is if you've got profit and it's a majority of your profit, protect it. If you got bad trades, take your good trades, wash your bad trades, get out of trouble, de-risk, de-leverage, have some dry powder. It's just a lot of pruning going on right now. I think that's the key to kind of surviving this whatever comes next. The market to the upside is easy. The market to the downside with random tweets and the president says one thing and then the actions are something else. I saw today that the market has an adverse reaction. If it's not uh, Scott Bessent that's talking right now, the markets are dropping usually. If it's like Navarro or Lutnick, like the markets are responding adversely. I'm pretty sure at this point, like the market's not loving Trump's tweets or his Truth Social discussion because usually it's just shock and awe, and that's not a good thing. So anyway, all right, let's keep going. So we'll go to dollar index. Dollar index still sitting at some pretty crazy lows. You can get down to a smaller time frame. Here's a pretty easy chart on the dollar. Here's a 1-hour time frame, and here is a 200 moving average. Okay, if the dollar gets back above a 200 moving average, it's probably going to be in a near-term buy zone. Not a huge one, but a near-term buy zone. Now, I also wouldn't be surprised if the dollar tests this 200, comes back down to the lows, or makes either a higher low or an equal low, or even a lower low. But I think that's going to be a bear trap, oversold divergent condition, and the dollar probably comes back up. So I could see a bottom forming on the dollar. This is one of the first times in history that we've seen such terrible conditions in the markets, with the markets dropping, seeming like it's a systemic risk globally, risk off trading, and yet the dollar's been beat up. Um, so again, this is kind of that discussion of gold's been a better alternative than the dollar for a safe haven type trade. Bitcoin has certainly proven its ability to maybe even get out of the high beta um, characterization, right? I mean, everyone's thinking like, okay, you've got beta at 1, which is the S&P 500. Everyone's thinking like Bitcoin's probably a beta 2, beta 3, right? Meaning like it's 2 to 3 times more volatile than the S&P. Well, if now it's 1.2, 1.5, that's a big improvement. We're seeing less volatility in Bitcoin. Give me 1 second. So, dollar index, what I'd be looking for here with currency trades is if the dollar comes back down to revisit these lows, not picking the bottom, okay? But if it's testing the lows and bouncing back up, we probably head back up into these equal highs. If it goes slightly lower, I'd still look for this market to then turn, look for a trend line break. And all it is a pullback, and to me, like a pullback to 100 or 101. This is the outer trend line on the dollar on the higher time frame. You'll see this on the daily chart. So if you go to the daily, the dollar is still in the sell zone as long as we stay on the left-hand side of this trend line, right? So this gives the dollar a chance to, figure out where the bottom is. Maybe it's here around symmetry, and then we pull back into past support becoming resistance. We pull back into this trend line area, and then the dollar makes a decision. Does it go further down? Does it break this trend line? Do we put in an actual low that's tradable? So, as I just said before, if you're short the dollar, which means you're long Aussie dollar, long euro dollar, long pound dollar, long New Zealand dollar. You get it. Moving stop losses. There could have been enough volatility the last couple of days. You might have been stopped out already, which is fine, and just see what the next trade is. So I think the dollar is going to give us a setup. I wouldn't call the bottom necessarily, but a move to symmetry somewhere in here, trend line break. Watch the 1 hour time frame above the 200 moving average. I wouldn't mind seeing the dollar pull back towards like a 101 or even this trend line around the 102. But then from there, yeah, I could see the dollar resuming a downtrend. I mean, if we're really going to see this big shift where it's like anti-dollar, losing global reserve status, blah blah blah, then yeah, the dollar's going to get way weaker. You know, so but until then, I think that it's sold off far enough and fast enough that we're probably closer to coming into some lows and bottoms on the dollar. Oil, gold, silver. Oil at 62. I'm going to keep a close eye on this one. As I said, I mean, we might pull back into this multi-month support, and that might offer some resistance. I probably won't do much with that one, but I think what I'd prefer, and I've talked about this week, is if oil comes back down to the lows. If we come back down to the lows, I'm looking at taking like a risk-defined bottom trade and see if it goes back up into this floor. So I could see this level, being pretty important where we don't necessarily break in oils in, major crunch zone, but we're not all of a sudden seeing oil. I mean, I listened to a macro podcast last week, and this guy's like, I see oil back to $100. I mean, he had reasons, but I'm like, that's way higher, man. Like that's going to break so many things. If we have oil at $100 a barrel, that's going to break so many things. So I think that oil still is like a very supply and demand range driven instrument. Unless we have like crisis happening, I don't know. But that would be crazy. I mean, I can't imagine if we're back up to $100 a barrel, like what that's going to be at the pump for US, let alone the world. So anyway, so if we come back down to the lows, that's why I have the chart I'm set, and I'll look at probably a 111 or 111 trade. Gold. Okay, I got to ask, how many traders bought the dip? This is the daily time frame. We still haven't hit a 21 moving average. I'm still not even close to considering a dip. I want to see at least a pullback to the 21, at least a pullback to the 21, maybe even the 50. This is a very aggressive trend. A 21.50 pullback, I would say at least I can start building a trade here. But as I mentioned, and I just don't ignore this, we're probably going to hit this 200 moving average this year. So I think there's dip opportunities, but I mean, having a high here, at least a pullback to the 21 and or pullback to the 21 and the 50. I'll probably look at a trade on GC. I might like to add a couple of contracts to GLD. Okay, so miss the dip at 3. It's like, well, I mean, okay, the low was. You're saying the dip way back here? I mean, that's fine. I mean, the nice thing we might still get there. Right? We might have a dip to like 3180. We might have a dip down to 3100. Like those are decent dips. Those are decent. But the hard part on gold is like, where is the target? Because all gold is now is like it's all-time highs and it's an anti-dollar play. And right now it's basically safe haven-ish. It's not inflation hedge, but it's safe haven-ish. So I mean, if the markets are going to be still like toying with the idea of uncertainty and how this trade war maybe escalates or maybe it de-escalates. A de-escalated trade war probably doesn't make gold look great. There's probably a ton of profits that are going to be taken here as well that could cause, the technical correction I'm looking for. That being said, though, that technical correction could still be an awesome time to get positioned for more upside, because the nice thing is we've been to this high before, so at least we can go back to those highs. Make sense? So anyway, I'd like to see, at least a pullback to the 21 or the 50 period moving average. Silver doing pretty well, and hopefully we'll crack this chart alarm here in the next maybe month or so. I do have some covered calls on SLV. I've got some diagonal spreads, sell side at 34, which is up above this measured move. My covered calls are at 34, 35, up above a measured move. I don't want to necessarily be covering silver, so I do have some covered calls. So I have the shares. I've got a covered call at 33.50, which is right above the measured move. Oops, get this up here. So this measure move is around $33, 33.50. I don't want it to get called away. I mean, my goal on this one is I'm trying to ride silver as high as it wants to go. We've had a 2011 high back in the 40s. We had a 1980 high back in the 40s. It was like high 40s, almost $50. And so I am still a pretty big fan of the technical picture of silver to go higher. So I'd like to, lower the cost basis with a couple of covered calls. On the diagonal spread, I might be a little more aggressive and willing to let that one go, because that is a trade where I'm long a call and then I sell a call against it. So the cost is, instead of having the debit be, I buy the call for, let's say, $10. Well, if I sell a call against that, it lowers the debit maybe to 9. And if I can do it again, I can lower it to 8. I do it again, I lower it to 7. And eventually I can whittle this down where my debit is really cheap, but the upside potential is still unlimited. So, but if it crosses my call side, then yeah, I've got to let it get called away, and I exercise the long and the short and get the net profit. But still, it's looking pretty good. Here's the diagonal. So that diagonal spread is up about $500. The shares up about 1,400, just for one particular count. So this is like times 10. But I have also a bull put spread here. So this is bull put. So diagonal spread running, bull put spread running, and shares with a covered call. And net. So this account's up about $2,000. So for all of my silver exposure, right now up about 11,000, 1,800 bucks. So that's open P&L. Year to date is up about $18,000. I'd like to double that. I'd like to see if I can get my silver position up about 40 grand or so. If I add more to it, if I add more to SLV, if I add more to SI futures, same thing on GC. I'm just going to keep a close eye on that stuff. Okay, so I like the technical outlook of silver. I'm hoping that we start to see, and they can both perform very well. I mean, I'm not sitting here hating on gold. I think that both can perform really well. This is gold versus silver. So obviously, if there is a new range here where we have this, gold had this huge rip. If there's a new range where gold and silver ratios start to balance out, they could both still be performing higher, by themselves. I mean, gold can still go up, silver can still go up, but if we can keep the ratio consistent, like maybe they just both benefit. Silver is definitely a cheaper play and a cheaper asset. Call it poor man's gold, but if it catches up and that ratio becomes more consistently aligned with silver getting an outperformance, then silver's a great trade. And the nice thing about silver is I can see where it can go. Gold is a guess, right? I mean, I'm thinking gold bulls are. I have no idea what gold bulls are talking about. Like gold bulls are like, what's your target? I mean, I can look at the chart. I could do my best to try to figure out where I think gold can go, but I'm just going to use some technicals. Let's go back to a weekly chart. Let's start for some major swings. And okay, so let's start back at these lows in 1999. And I'm going to give this a big fat swing. Okay, let's say that's all wave 1. Well, this is a pullback wave 2. This is a push wave 3. Okay, now the nice thing is, and this is why I'm still bullish on gold, if this is a wave 1 right here, this is a wave 2, and this is finishing a wave 3, which realistically it is. I mean, this is a 382 pullback or so. This level was hit, so that could be an extension there. But because this was a 3-8, I guess it was a 5-0 pullback. So let me tone my optimism. I was going to say we could probably get up here towards 4,600. But anyway, so we have two swings. So we've got low to high swing for wave one, pullback here. I think wave three is now finished. So the nice thing about a wave four, and I'm not like a huge Elliott wave person, but I can do some 3 and 5 wave calls. But if this is wave four is usually the quietest wave and is usually a pause wave. So wave four, I mean, it could come all the way back down to this level. It could. Unlikely though, because usually a fourth wave is going to be something like this: a little pause or consolidation before the continuation higher. So the fifth wave to me is a run up into probably 45 to 4,600. So if I had to, gun to my head, if I've got to call a price target on gold, I'm going to say around 4,500 to 4,600. 4,500 to 4,700 is what I see as a profit target. So again, all I want to see is a pullback to find some decent levels, and I still think this has, longer term bullishness. And I'd be happy with that. But I can't look at a chart that has almost 400 bars on a daily time frame, that has crazy overbought conditions on a daily, weekly, monthly time frame, and say, yes, I want to buy gold at these highs. I just can't. So hopefully a pullback to the 21 moving average, hopefully a pullback to the 2150 moving average, hopefully a pullback into the deeper moving averages that can help me reposition for a much better longer term outlook. And I can say, I can start hating on gold because it's too overextended. I can actually be an enthusiast of buying gold because it's offering a good price. Okay. So again, this is what I'm projecting, but silver, you can see where it's been. So, I mean, we're projecting all-time highs, and it doesn't have to stop there. I mean, who knows, man? I mean, gold at the end of the day could be in this huge bull market where it's like, yeah, just let it run. And gold is going to serve as and we don't know. Like, honestly, there could be all sorts of ways that you manipulate. Like the US could just sell a bunch of gold, and who knows? I don't know. I'm not going to call the answer on what this, like, how this technically plays out. Um, but I don't think the US just rolls over without a fight. That we talk about this world reserve status, and Ray Dalio's talked about the change in world order. I mean, look, we're world power number one. I don't think the US just goes down without a fight. I mean, China might have a lot of leverage. They might look good for a lot of reasons. Um, but it's hard to be extremely, extremely bullish on China, um, at least with Western money. I could see alliances. I could see trade with China. I could see all sorts of reasons that it's like a necessary evil to, align with China. But as far as investing, I mean, nobody trusts the numbers. Unfortunately, nobody trusts the numbers in China. Nobody trusts the books. Private equity in China would be probably the last thing I'd want to touch. So I think that China needs, Western money if they want to see their stock market grow. I know that China got themselves in a huge property market bubble, and I mean, domestically, like, there's not a lot of domestic demand. Like, Chinese are not buying their own stock market; they're saving. Like, it's just a totally different culture. They don't consume; we consume. They save; they don't invest. It's Western money that's the big thing. So what do we do? Well, we can sanction China. We can close down we can delist all their stocks. I mean, we can do all sorts of weird things like that. That could, again, like, be more problematic and be bad for the global economy. But at the end of the day, I mean, look, globalization is a good thing. I really think it's a good thing. I think the U.S. has been the greatest market the last 30 years because of globalization. China's been a big contributor to that. The difference is now is, they're strong enough and have enough leverage where, I mean, I I read this tweet this morning. I thought was interesting. I think I took a screenshot of it. Um, okay, so, and again, take it with a grain of salt. Trump tariffs China, ups tariffs to 34%. China does nothing. Trump hikes tariffs to 84%. China responds with matching tariffs. Trump hikes again to 145. China responds with matching tariffs. Trump says that he wants Xi to call him. China does nothing. Trump says he's ready to make a deal. China does nothing. Trump rolls back tariffs. The art of the deal. Okay. So, it's like, I think the US side is being more vocal on, like, we're trying to jawbone deals and say that everything is fine. We're working through things. It's like, we don't know this. we don't know if deals are actually being mapped out right now. We don't know if we're just being told things. The market's reading with anticipation that things are getting better. Um, it, it's like all the chips and cards will be on the table at some point. But right now, it's still got to work itself out. So this whole 90-day window for the tariff, um, deadline in July, and then after that, you're going to start seeing the overlap with the Fed rate cut cycle. We've got employment to get through. We've got earnings to get through. We got multiple months of inflation data. One thing, by the way, coming into May, I don't know if anybody. I'm gonna possibly look on the Fed website. Maybe I can find it for my some of my data stuff that I'll listen to this weekend. But I'm curious what like the Fed forecasts are for May's print of CPI. I'm hoping it's lower. Let me go to, I guess my closest reading would be like a Trueflation here. I mean, Trueflation has the U.S. inflation index down to 1.4%. I mean, as long as this trend continues to stay down and not start to spike up, then I would believe that CPI numbers, PPI numbers, core PCE numbers would continue to show, pressure to the downside, which hopefully is good. I mean, if inflation is lower, obviously the stock market dropping is deflationary, um, but we don't know if there's going to be a sticking point. So, are we really close to getting back to 2% inflation this year? Maybe. But I'm very curious on yields. Like if yields don't budge, it's hard to see that things are going to get better. Because of our inflation data is like, well, CPI headline is down. Well, fine, but what about core? What about super core? Um, all those things that have been extracted. It's like, our housing prices getting cheaper? Our yields and rates getting lower? Is pay at the pump consistent or is it lower? Are phones cheaper? I mean, did anyone see like a few weeks ago with this whole trade war exploding that an iPhone might cost $3,000 or more? I mean, I can't imagine putting my phone on lease for 5 years to pay it off. It's like that's insane. Maybe 10 years if you're paying like 40, 50, $60 a month for a lease on your phone. By that time, it's going to be planned obsolescence. And I mean, I'm still lucky that I've got an iPhone 12 that's working, but who knows how long that's going to last when you got to plug it in twice a day. So anyway, point is, this is a good at least measurement for inflation for real time. We'll have more data coming into May's prints for April's inflation. It could be way off because the data could be lagging because obviously April's data could be experiencing all the fluctuations with a trade war as it was happening in real time. So I'm not really sure, but I'm curious what the forecasts are as far as like what the Fed has for like the headline CPI. So anyway, I digress, but here is gold. Like I said, minimum pullback for me would be like a 21 to 50, and I would be happy to get in small here and then another allocation towards my 144 to 200. And from that point, I would say bring on the all-time highs, right? A little chunk here, a little chunk here. I wouldn't be opposed to even having like a 10 to 20% allocation of my portfolio into gold. I know that seems like a lot, but I would do it also with GLD. And the key for me, it's drawn terribly, but if I did GLD, the key on this is not just allocation, but also trading options around it. I can lower my cost basis. I can be agile. Um, I can generate, maybe a little bit more leverage out of this if I get the direction right. But I don't mind having a bigger stake in gold as opposed to high in equities. Nothing against U.S. markets, but if we're still not going to make all-time highs and have this great market to recover, I'd rather have allocation as something that probably has promising upside like a gold and silver allocation. So if I was willing to up it to 10, 20%, I'm probably going to split that 50-50, half gold, half silver. Okay. All right. So that's gold, that's silver. Bitcoin, 93. As I mentioned this week, if we have a pullback, there's a nice little cluster back here around 85,000. That would be an area one to watch. And then if we revisit the lows at 75, that's an area two. If all I see on Bitcoin is a bull flag, I don't know if I'm necessarily going to buy a bull flag on that. But I do have some IBIT covered calls at the all-time highs. That would be around $62. We're not there yet, but we're trading at 53. I've got some covered calls on IBIT. So IBIT exposure is here, up around $38,000. And shares, so bull put spreads, some ratio spreads, cover calls at 62. That's out to May. I'm most likely I'm not going to be adding a bunch of cover calls on IBIT because if we're going to see a run to this high around $61 to $62 and we break these highs, I don't want to sit here and call the highs. Like when I'm ready to dump my trade of Bitcoin, it's going to be, like a 1 week out covered call and just let it get called away. And I'll probably put an at the money or in the money covered call. But got this measure move up here towards like 61, 62. That's about where we have the all-time highs on Bitcoin. So if we are going to see, push bull flag, then maybe we revisit 108, 109. But if we have a pullback, and I mean we could, if we have a pullback, I wouldn't mind adding something here for a retest, right? So we got a nice little swing. I mean, we took out these recent highs, right? So a nice little swing, pull back and find some rebalance, and then see if that is a swing to the upside. It could get a little bit messier. We could have a swing here, pulls back, flat pattern, then goes back up. But the nice thing about this, and I talked about this actually a lot yesterday in an afternoon session, confirmation is we're on the right-hand side of the trend line. So we're on the right-hand side of the trend line. That is a good sign for Bitcoin. Looks pretty promising. The question now is, do you want to buy this high and say, like, that's my trade? I think that's a terrible entry. If you buy this high, sure, it can go to the upside and all-time highs again. But if this is where I'm going to enter, I would want to trade small enough to say, okay, that's trade one, this is trade two, and this is trade three. And my stop loss would be down here. So whatever my allocation is, I would say invalidation down here. 69,000, 70,000, kind of my invalidation zone. But as long as we stay, there's good upside potential here, obviously better upside potential and risk reward, and fantastic reward to risk. But I can't just throw the trade in here and say, well, that's my stop loss. Well, that's in the way. And that's my least favorite way to trade, is putting in what should be a good trade. But the bigger picture is like, you got to give price a little bit of breathing room. A little bit of breathing room goes a long ways. I do think that all-time highs look a lot more encouraging now than they did when this chop zone was happening. And if the markets are going to respond with some upside, then that's obviously good too. So anyway, that's where we're at. But I think if we get a pullback, awesome. Pull back towards 86 or 85. I like that zone. Pull back into recent lows at 75. I don't know if we're going to get there. I mean, this could be a nice encouraging move where if the markets continue to drift higher, there's a bit of risk appetite in there, then Bitcoin's probably going to get some flows. Gold probably getting some flows. Bitcoin getting some flows. It's interesting to see that right now it's like S&P is up today, dollars flat, bonds are flat, Bitcoin is flat for the day, gold is down for the day. So, but if everything is kind of like, yeah, risk appetite. I mean, I like Bitcoin going to all-time highs again. Okay, BITO looking a little bit better. I do have some exposure in this one, but because of the high dividend on BITO, it's not crazy profitable. So I'm down in this one, even though I'm collecting a healthy dividend. I don't have it covered. Okay, I don't have it covered. I wouldn't. I'm not really going to cover this one. I'm okay dumping BITO and staying with IBIT. So if this one gets back into, let's say, this 27 to $30 window, I would probably sell a covered call, get rid of this altogether, and just be out of this trade. I'd rather focus my energy in, playing Bitcoin and IBIT as opposed to BITO, which is more of a derivative that doesn't look like the spot price at all. I think IBIT is a cleaner trade. Are we going to run a 5,500 today? So right in there around 10:45. Son of a biscuit. Let's see. I've got to just watch my SPX this morning. So we're already way above the expected move. It's already up 81 points. I mean, come on, market makers. But I obviously look left. I mean, I'm not going to complain too badly. It's like this high. This is the high from April 9th. If we hit that level, does the market respond in any way to that? If we just go and blow through it, then that's kind of an encouraging sign for where we are for the week. But I don't really want to lose today on an SPX trade because I'm taking some heat on that right now. So SPX for here, down a few bucks. I don't really know how much longer I want to sit and hang on to this one. I'll assess this one in the next probably 45 minutes whether or not I keep it. Otherwise, other trades are looking fine. Okay, anything to the upside today? Let me check something here. So if I dump or at least put a hedge in. Let me see, April 24. Look at a butterfly and try to pin this thing around 5,500. So if I pin 5,500, so right on the outside of the expected move today, this might be a losing trade, but two ways this works. If I'm right on my other trades, it pays me about $100. If I'm right on this trade, and actually, this $60 can become. Let me see if I can get in this trade for maybe 50 cents. We're at 54.54 right now. That's an out of the money 10 wide. See if I can get in here for 50 cents. All right, let's see if this one fills. Hopefully 60 cents, no more. I'm above the mid price right now. Come on. I'm looking to see if price wants to climb towards 5,500 on SPX. I'm above the mid price. Jabronis. 65. All right, filled at 65 cents. So I'm putting this on as a bit of a hedge play, which is this. Let me bring this chart up. So if price is going to continue to climb towards 5,500, that 65 cents can potentially pay about $1,000 today. I know that's probably not going to be what I take profit on, but if I can turn 65 cents into, $1.30, I can turn it into maybe $2. That wouldn't be awful if price is going to go that high. Now, I'm only risking on that trade 65 cents. If price falls back down below less than 50, it'd be 54.45. If price is less than 54.45, then I have about $100 a profit waiting. So if price goes up, I've got a hedge that can help me offset some of that. It may not be off. It'll be a little bit less, but I can offset some of the damage. But turn this butterfly into maybe a 2 to 3 times winner. If I get really lucky, I pin this thing, I can make freaking $1,000 on it. But I'm going to give it a chance. So that way, at least I've got kind of both sides going today. If price is just going to drift all day, then that's a big reward to risk, and I'll take on the heat for my sell side SPX. So the butterfly spread is I sold 2 calls at 5,500, and then I bought at 5,510, and I bought at 5,490. So it's a -2 at this strike at 5,500, and then I went 10 wide for a +1 and a +1. So this is 5,490 on a buy side. 5,500 is my sell side with 2 contracts, and then 5,510. So I'm creating a trade that looks like this. A butterfly spread is this. So price is right here, and if price moves its way up into 5,500, because this is a 0 DTE, this profit trap has the potential to pay out. I look at the numbers, and I think it has the potential to pay out like 10 to 1. Even more than that. So 935 potentially pays out 14 to 1. Now, potentially that's going to be very hard to hit. That exact trade is going to be end of day. So we'd have to be like literally at 5,500 end of day for that to pay out $900. But I could take $65 and turn it into, maybe $300, $400, $500, maybe. But if the market doesn't respond to that and we pull back and we're back below this blue line, then I'll sacrifice the 65 cents. I'll make $100 here, and I'll still finish net positive. So either way, just trying to turn it into a net positive day. Okay, couple more things. Got through Bitcoin, did China, let's do some currencies. Currency strength chart. I did the dollar index, so we kind of got an idea there. Not nearly as spread out as what it was yesterday. So 120 to 80 on the vertical axis. Swiss and yen were the weakest yesterday. Today is a little bit more choppy. So dollar's weak, CAD is weak, everything else is kind of jumbled, but not a ton of volatility in FX land today. So we've talked about currencies all day, or all week rather, and dollar index is probably the most important basket to be watching. I'm out of the Japanese yen. I'm still holding Swiss pairs right now. looking for bottoming formations. So I'll just kind of continue to space out my levels, keep an eye on things in the bigger picture. Individual trades, I mean, I'm watching Euro Aussie, Euro CAD, Euro New Zealand. I'm watching Pound Aussie, Pound CAD, Pound New Zealand. I'm out of the dollar crosses right now. I'm just kind of building positions up on my. I've got Aussie CAD long, New Zealand CAD long, Aussie New Zealand long, and then all my Swiss pairs, except for Swiss yen, I'm long. Okay. All right. I think I'll wrap it up there for today. You want to see dollar Swiss? Sure. So dollar Swiss, we're still on the left-hand side of this trend line. We did breach some major lows. Obviously the dollar index has sold off a ton. All I'm really looking for in this trade is my break even is right here in this little midpoint. I'm looking to see if we can find this pocket around 8,800. So I'm not looking to be super greedy on this one, but I am watching to see. I put in some pending orders at the low. I'm actively looking to see if I can spot a bottoming formation. It is very possible that this low does kind of work its way up into that pocket. So I might not get the bottom that I want. But a couple ways this plays out is one, this just continues to go higher. And all of a sudden, this little sharp drop that's inefficiency ends up getting filled. That's enough to take some profit. My break evens around 8,600. Take profit at 88. Walk away with another chunk of profit after rebuilding some positions down here. But I'm not necessarily going to hold this one all the way to 92 again. I will consider holding this if we go all the way back up here to the highs, and then we pull back again, maybe building another position for a swing trade. Maybe. Okay. But the other side of that is if we don't go straight up to fill that pocket at 8,800, then this might still come down for another low. I'm looking for divergence and then looking for a bullish pattern, and then I'll look for a 3 and 5 wave move. But still, that might be my destination to get out of the trade for profit. So, I mean, my break even at 85 to 86, lots of trades filled in between. I took about 20 plus positions off for profit there. So this is a fresh batch of trades on dollar Swiss. All I'm trying to do is turn it into profit, and this is a pretty high probability zone if you ask me. I think this one gets hit, 8750 to 8,800 gets hit. Okay. Nasdaq, we did Nasdaq earlier. So here, I mean, here's the recovery if you ask me. You've got the giant swing from April 7 low to April 9 high, right? There's your swing. We talked about the flat pattern, so it was a low to high, pull back, and now the market is back up nearing those highs. So this is a good sign. If this is a flat pattern, the market can break and go higher. I think the big resistance is look right now. It's pretty promising to see this market go higher. I think a measured move would get us up into this zone, right? So I mean, it could be a pretty simple swing. It's going to get a number on this. So pretty simple swing. 19.7 to 19.9. So this level and this level, 19,700, 19,900. I think that's a spot where this might run out of some steam, face some pretty heavy resistance, and then we deal with like another kind of chop zone. Anything above this, this could also be setting up for a larger pattern. So any pullback here, it's like the bulls could step in, but the cleanest trade to me is going to be a break of this neckline for this market to try to get back to all-time highs. So that would be fun to be a part of that ride. If we're going to get back to all-time highs, I'm probably maybe back up to this level. I hopefully hit all-time highs in my portfolio again. I'm watching those levels closely and carefully. But I mean, there's basically room on the daily charts to get back to this 200 moving average. So we had our death cross, right? Our 50 and 200 crossed over. We had the death cross prices below it, but oops, let me go. Yeah, that's okay. I'll delete that. So if we do break the April 9 high a little bit up towards the 200 moving average is going to be like the next big resistance zone. Okay. All right. And as I mentioned, the key level was that 5450 zone right in here. So if market makers defend that level today, cool. If they don't, that's why I have that butterfly spread into 55 if I need it. It pays out really well. It might just help me wash, some of the risk. But if I ideally today would be the butterfly spread is really cheap. Okay, my bigger risk is going to be if I let this thing go all day, I've got to make a decision. I'm hoping that market makers will do a decent job defending 54.45 or 54.50 and pull back, maybe 20, 30 points or so. Okay, oil. Oil's it's a range. I mean, I'm looking to see if oil revisit the lows at 56. I'm looking to get long on oil. Otherwise, it's a supply and demand trade. I'm sure if you're selling premium on oil and doing strangles or iron condors, you're probably doing okay with it. It's just that it's like it's an outlier risk of like I don't know if oil is going to break. I don't know if oil is going to do something silly. So I'm really cautious on oil. But I'll take a defined risk trade if we get back to the lows again that we had on April 7th. TSN Tyson Foods at 61. All I'm going to look at on this one is, I mean, longer term, it's probably a lower beta stock. Yeah, 0.02. I mean, 3.2. That's good. Let me see if there's upside potential here. So TSN. I mean, great snowflake analysis, way below estimated value on discounted cash flow model, became profitable, no risk detected. Price to earnings is not terrible, not super cheap, but not terrible. But that does look pretty encouraging. Unless everybody goes vegetarian. So, here's what I'd say on Tyson. You have a level now that would be somewhat intriguing. Like, okay, I'll establish a core position now, but if that's position one, I've got to be willing to buy this thing at COVID lows. So position one, position two, and then longer term, sure, let's get this thing back up to $100. So I mean, if we get consolidation, what's nice is this does look pretty bullish to me. I mean, we're making higher lows. I know we're making lower highs. If I buy a chunk of shares here, I've got to be willing to buy a chunk of shares here. So one way I could participate in the heck. One way I could participate in Tyson would be either one, I buy some shares, and if I want to buy enough to control options, I'm at least buying 100 shares. So that's one way to do it. If I want to save some money on options, by using options, I mean, then I could do like a 2-year diagonal spread. So look, if I buy shares right now, let me just go to TSN. If I buy shares at the premiums are going to be probably garbage on this one, so you're not really going to have this fantastic option trade. The premiums of selling will be a little bit weaker. But if I were to buy the shares at $61, it's going to set me back, 6 grand cash. Okay, fine. Well, if I looked at, let's go to January 2027. So that's out 630 days. If I buy a deep in the money call, this could be a little bit cheaper of a cheaper way of trading it. If I were to buy, let's say, that puts my break even around 60. This puts me around $65 break even. So if I buy two of those and then I sell an at the money, so that's a synthetic. Okay, so instead of spending 6 grand, I can spend about $2,100 and I can still have unlimited profit potential. And the most I can risk is the debit. This isn't a bad way to trade it. You're giving yourself, plenty of time. Um, that's a long time actually, and you have the same profile as if you were to own the shares. So I'd be long at 50. My break even would be around 71.20, which I don't love that setup if that is my break even. I definitely don't love that setup. Let me see. Hang on a second. Let me build this out and then I'm going to wrap up here in just a few minutes. There you go. Daniel says, have my own chickens now. Yeah. Well, that definitely helps. And maybe that's what the world's going to do. It's like, you know what? We don't need Tyson. We need our own chickens. Everyone's going to have their own little plot of land, and you're going to have to buy a quarter acre for $1 million, and then have some eggs with your chickens. At least that's what it is in Utah. You want to buy a plot of land for a quarter acre to a half an acre, it's going to be $1 million. All right. Anyway, let me float this out here. So let's go TSN. Okay. So edit spread. Oops. So TSN load. So I'll do this with options. Go out to 2027. If I buy the 50 call, 2 contracts, and I sell the 60 call, that should be like a zebra trade. So that's what it looks like. Um, yeah, that's not bad. I mean, it's basically a synthetic trade that gives you as if you were to own stock, but you do it with defined risk. Because the other option would be if I buy a call, sell a call at the same strike, that's a synthetic trade as well, but I'm also taking on unlimited risk to the downside. This one at least is capped, right? I'm risking about 1% in order to make, upside potential. Now, a one standard deviation move, if Tyson is going to go higher, a one standard deviation move gets me to like $95 to $97. I mean, that would be worth it if I can turn a $2,000 debit into a $3,000 to $4,000 profit. I think that's totally worth it. So, and that's also there's plenty of time on that trade, and I can close this out whenever I want. So, not a bad trade. If I like it. I mean, I do like it enough. Fundamentally, looks pretty strong. So the question is, it's like how much consolidation are we going to get before this thing actually breaks and goes higher? And on top of that, are we going to see consolidation that potentially retest lows? Because if I'm going to take a trade here, I have to be also willing to take a trade here. And maybe the plan for me would be if I did this with a zebra or a diagonal spread, I would be willing just to buy the shares outright at a better price. But it's not a bad one. Dividend wise, not bad, 3%. It's not super expensive. If I wanted a real dividend, I'd probably go MO, but I think this one has some pretty good upside potential. So yeah, I don't mind it. I'm gonna write this one down. I might throw a trade in there. So TSN and look at some comparables. But anything at like COVID lows would be pretty freaking sweet. If I could own this at 45, I'd be happy with that. But if we do break and go up, I mean, you're getting all the benefits of the upside without having to take on the full risk of the downside. That's the nice thing about a zebra. So, all right. That being said, I'm gonna let you go. I see Carvana. Carvana fine. It was one of wild stocks last year. I just look at it this way: CVNA. So this is a little concerning that it's not super awesome on the snowflake analysis. Price to earnings is probably pretty high, very high. Fair value, it's trading over that. So I would definitely want to wait for some pullbacks and dips Carvana compared to what you see elsewhere. Now, I don't think Carvana is necessarily in the same zone as its peers where it says, O'Reilly Automotive, they don't sell cars. They sell parts. AutoZone sells parts. CarMax, okay, there's cars, but Carvana is way more expensive price to earnings. So I would still want to see a pullback. Last year it was a great stock. This year I kind of hold off. We had about a 40 to 50% correction. I would hold off. And on top of that, like the used car market, it could benefit. I've heard, the rumor mill is with tariffs coming in, and like I read yesterday that like Mazda is stopping production in the U.S. and there's probably going to be other automakers that shut down assembly lines, stop assembly. But Carvana with a used car inventory could actually be okay because they can just sell their cars and there's no tariffs are already in. They can obviously mark them up however they want to, but like Hertz has a giant fleet with their rental cars. Carvana, giant fleets. You got their huge vending machines all over the place, but I still don't like fundamentally where the stock is at. I'd like to see a pullback. So CVNA, yeah, I mean, I don't know, give me a pullback. Even if we came back down to like 150 or so, maybe. But it's, the stock was, I mean, hell, I traded this thing at, $10 and flipped it for like a couple 100%. And I was thrilled with that trade. But little did I know that the $7 stock would rip up to almost $300. Carvana, who knew? So anyway, dollar CAD, it's dollar related. So, watch your big levels at 3,200, watch your levels at 45, 4,600. It's messy right now. I'm looking for a turn on the dollar. All right. I'm out of here. Have a good rest of the day. I'll see you tomorrow. Bye.
Thanks for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. All month long, you can get the Edge Finder 40% off, our best discount of the year. Check out the links in the description below to visit the Edge Finder homepage or speak with a team member directly to get the 40% off discount now. Trade safely and we'll see you tomorrow.